to learn about something that I think some of us have little knowledge about, and some of us have, should I call it, maybe more advanced knowledge. But today we'll be able to hear from one of our experts to walk us through what filing of personal taxes in Canada does look like. And I know we've all read various Bible stories which talk about Nicodemus, and we say, okay, tax collectors, maybe they are not the best of friends to most people, but we are living here in Canada and we really have to support the government. We have to, it's a civic duty that we owe the country that we now call home. And that's why we think it's very important, especially as we have some people that this might be their very first time that they will be filing taxes here in Canada. Some might have been doing it over the years, but maybe there's some tricks and opportunities that they have not been taking advantage of that we'll be able to learn today. And before we have our opening prayer, I just want every one of us that are here present to maybe type in the chat the various provinces that we are joining from, so that our speaker could have maybe a fair representation of how widespread the audience of today is. So I'll start. I'm here in Alberta. So we'll look for others to type in their various provinces. Okay, Sister Priscilla is in BC. Okay, yeah, we have Sister Jumoke from Nova Scotia. Okay. All right, we have also Brother Ayo from Nova Scotia. I guess we'll have some folks joining us from Ontario and Winnipeg as well. Okay, Saskatchewan, Newfoundland. Okay. All right, so I think we are widespread across the provinces. So it's a pleasure that we can have you join us today. And we're looking forward to a wonderful session with our speaker. So I will invite our treasurer, Sister Jumoke. If you please can come on camera and put on your speaker to give us a short prayer to kick off this session. Thank you.
Thank you so much, my brother. I'll be on the camera shortly. Just give me a minute.
Okay, take your time. I want to thank, I think maybe it's Bro Felix, whosoever gave us that wonderful song as intro. I think it was beautiful and we enjoyed it. Can I have the hands of those who equally enjoyed the intro songs that we had? Maybe you put in your reaction in the chat as I think we should give a hand. Yes. So Brother Felix and Brother Tunde for giving us a very good session. Okay, so maybe a bit of house cleaning, or what do we call it, housekeeping. We will take a question and answer session at the end. So if you have specific questions as the presentation is going on, please do keep it, and we'll be able to attend to those at the end of the presentation. That's the way we think things will be run smoothly, so that we will not cut into the presentation during our speaker's presentation during the session, but afterwards we'll give room for Q&A to address those. Okay, so Sister Jumoke, please lead us in a short prayer as we go into the session.
All right, thank you so much, my brother. Everlasting King of Glory, Lord of Lords, we thank you for a time like this. We thank you because our gathering today is to give you glory. We thank you because we are alive for the opportunity to learn how to file our taxes in Canada. We thank you for the community, the people we call friends and family. Into your hands we commit the activity today, and our brother that will be speaking to us. Speak through him, O Lord, and let us learn all the things that we need to learn. And at the end of it all, may we be able to give you all the glory. In Jesus' mighty name we have prayed.
Amen. Amen. Thank you so much for leading us through that session. And without further ado, I think we'll go into the introduction of the speaker. Today, we've had the privilege of inviting friend, a friend of mine, Mr. Roberto Caibigan. I've known Mr. Roberto for well over 14 years now, I would say. We used to work together when I was in the Middle East, in Qatar, before coming over to Canada. And I think it's a joy that his family and himself also, moved over to Canada a couple of years ago. So he's a family friend. And not only is he an experienced banker, he's also an experienced tax practitioner. And I think it's one of the things that we'll be looking forward to as we'll be sharing with us today. He's married with two lovely sons, and his wife, they are all based in Calgary. And so we'll be hearing from him in a short while. And I want to thank him for giving his time and his resources to be able to share with us today. So as I said earlier, please do take notes during the course of the presentation, questions that might be agitating your mind, and then we'll try and collectively ask if it could be answered after the session. So Mr. Roberto Caibigan, you are welcome. This is Nigerian Adventists in Canada. We're a group of Nigerians that yeah, based here in Canada, and we are also Adventists, a member of the Seventh-day Adventist Church. So we've coming together as a community to support each other and also to provide knowledge and understanding to some of our folks that might be coming to Canada recently, and we could use this avenue to share the knowledge as well as help them as they settle in, as Canada is new to many, so also is tax system that we currently operate in. So we look forward to hearing from you. Take it over, Mr. Roberto. Thank you.
Thank you, Inga. Are you all able to hear me?
Yes, loud and clear.
Yeah, because I'm not seeing myself on the screen, so but it's fine. Wait a second. Let me find my presentation. Wait a second. I will present my screen here.
Okay. I'll let you know once we can see it.
Yeah, sure. Are you able to see it now?
Yeah, we
Okay,
can see it now.
wait a second. Let me just click on this one. Good.
Okay. Yes.
All right. Okay. Thank you very much, Inga, for that wonderful introduction. As he said, myself and Yinka have been good friends for over 14 years. I couldn't even remember the number of years, Yinka. But we worked together in the Middle East as a banker in one of the banks there, and then we moved to Canada 7 years ago. I will speak to myself shortly, but before we do that, I think it's really good to have this opportunity for me to share my knowledge about the Canadian tax system, right? So I have prepared some notes for you about some of the basic information that you need to know about the tax filing requirements here in Canada. And we will go through each of them shortly. And hopefully towards the end of the presentation, I will have a chance to answer some questions. All right. So let's move on. So this is a small note about myself. As you can see, I have been preparing taxes for 7 years now here in Canada. Since we migrated here in 2017, I have studied the tax system and the tax laws of Canada through H&R Black. I was working as a seasonal tax expert in there. And then I moved to another tax company here in Canada, which is Intuit. Maybe you have heard about TurboTax Online. So yeah, I was part of the company as well. And currently, I'm just a private practitioner who helps Canadian file tax return, provide professional tax advice on. on tax matters. So yeah, that's a bit of me. And then let's move on. Okay, so why is filing tax return important? So as you can see here, this is a legal requirement. Whether an individual owe taxes or not, we need to file an income tax return. And it is a demonstration of compliance with our Canadian tax laws under Canada Income Tax Acts. We are, as residents of this country, we are required to file income tax every year. And as I said, whether we owe taxes or not, right? Any government benefits and credits in Canada are based on information provided in tax returns. So filing a tax returns ensures that individuals receive the benefits and credits they are entitled to, some of which are, you may know, Canada Child Benefit, Goods Services Tax Credit, and other provincial tax credits. I've seen there's some folks here who are from British Columbia, from Nova Scotia, Newfoundland, Saskatchewan. These provinces have their own, tax laws and have their own benefits and credits for their residents. I am not familiar with all of them. I would say, specialized in Alberta tax, but I have also an idea. For example, in British Columbia, I know that they have something called British Columbia rental tax credit, right? For those who are renting a house in British Columbia. Okay, tax return is a documentation that may be required when applying for loans, mortgages, or other transactions with the government and financial institutions here in Canada. So that's really, really important. That, of course, filing our income tax and paying our tax return dues, we contributed to, social programs by the government, such as our healthcare, education, and all the infrastructures that we see around. So these are the benefits, or why is filing income tax return important. All right. Okay, so what is the basis for the Canadian tax return? So it's always based on the residency status of an individual. And there are many factors that we consider for us to be considered as Canadian resident for income tax purposes. I just would like you to note that this is different from your immigration status in Canada, right? So residency status is different from your Canadian status for immigration purposes, right? Even if you are not resident as an immigrant, it doesn't mean that you are not resident for purposes of taxes. So there are factors to consider. As you can see, there's primary residential ties. That is the number one basis, right? So this factor considers whether an individual has a primary residence in Canada, such as home or apartment, where they live most of the time, right? Having a permanent residence in Canada is a strong indicator of residency for tax purposes. There are other factors to consider, like your secondary residential ties, like, for example, if you have an account, if you have a credit card here in Canada, and all other stuff that can indicate that you are a resident. The length of time spent in Canada, right? So the amount of time an individual spends in Canada during a tax year is also a significant factor. Generally, if an individual spends 180 days or more than 6 months or more in Canada in a tax year, they are considered a resident for tax purposes. So purpose and nature of stays and ties to another country. So what are the tax implications? So if you are considered resident for tax purposes, then you need to, or your income is calculated on worldwide basis. So that means that not only the income that you earn in Canada is taxable, the income that you earn from another country, from your home countries, just like me, I came from the Philippines. So if I have an income from the Philippines, that means that it's taxable in Canada as well. So that is world income, right? If we are considered non-residents, then only the income in Canada is taxable. All right. Next up is, all right. So here, in order to facilitate the income tax filing process, the Canadian government issues a social insurance number to each individual, right? The personal details of individuals are tied into the SIN, which will be used when filing an income tax return to the Canada Revenue Agency. So if the government is not able to issue a social insurance number, then they will issue an individual tax, that what we call individual tax number, or ITN. All right, so that they can use it to file their income tax return. Next one. Where's my photo in here? There's no photo anymore. Okay, so what are taxable income? So the taxable income, as you can, I've given some example here, your employment or self-employment income. Employment, you normally receive what we call T4 slip. That is where your employer summarizes the income and the deductions that you have for the whole year. Another one is a self-employment income, when you are not employed, but you have some business, small business that you are running to in order to have some income. So that is also taxable. Another example is investment income, like your investments in stocks, for example. If you have some money in your savings account or checking or savings account in a bank that earns interest, that also taxable income. Rental and other business income, if you own a property here or even in abroad and you are renting it out, the income that you earned from those are also taxable in Canada. Other incomes like tips, bursaries, and foreign income, as like I said, like for example, if you are working in a restaurant and you are receiving tips and all from the customers, right? So those are also taxable. Foreign income, like if you have an investment in stocks in another country, or even cryptos right now, like it's so popular. So if you are having those income from another country, then you are also liable to pay tax on them. So non-taxable income. So there are income. So not all income are taxable in Canada. So there are other income that are non-taxable. Examples are, certain government benefits, your child, the Canada Child Benefit, the GST, carbon incentive, and even your employer paid health and dental plans. They are not taxable, but they are considered as income, right? So when we file our taxes, we will have to pay federal and provincial taxes, right? And yeah, unfortunately, our income is taxable in both provincial and federal government. Here in Alberta, we pay taxes between 35 to 48%, depending on our income, right? So Canada is also using a progressive tax system. That's why the higher the income, the higher the tax rate that will be used to calculate our tax liabilities. right? Next one. So deductions and tax credits, right? So in calculating our taxes due, the Canadian government allows us to have some deductions that can reduce our taxable income, right? And what we call, and there is also another items, there are also another items that can reduce the amount of tax that we owe, which we call non-refundable tax credit. So example of deductions is what we call RRSP, registered savings plan contribution, the contribution that we put in there, your self-employment or business expenses. There are allowable expenses that we can claim as deductions for income tax purposes. Non-refundable tax credit examples of this are your basic personal amount, and that is a fixed amount of 15,000 for 2020 through 2023, but this one is changes based on um, economic index of Canada. So next year it will be somewhere around 15,500-ish or something like that. So depends on, so there is an indexation that they call to determine the basic personal amount. Some of the other non-refundable tax credits is an example is medical expenses. There is a threshold that applies to calculate this, but those that you spend on medical, like your prescription drugs and your dental services, for the entire year, you will have to have your receipt and total at the end of the year, and then you can claim. But again, it's based on, there is a threshold that applies to that. Your education and tuition credits, if you are a student, part-time or full-time for the part of the year, then you will be able to also claim for a non-refundable tax credit on those. The tax benefit or savings from the non-refundable tax credit is calculated at 15% of the total non-refundable tax credit. Let's say for 2023, you have a total of 30,000, including everything, your basic personal amount, your medical expenses, whatever that you have claimed. For example, is 30,000 multiplied by 15%. That the total, the resulting amount is the one that is going to be deducted from the tax liability for the year. To maximize your tax savings, ensure that you claim all eligible credits and deductions on your tax return, but you need to keep the receipts and documentation for that you plan to claim, because CRA, Canada Revenue Agency, may ask for them later on. So you need to keep the receipts and documentation. If you are unable to provide that, for example, you have claimed medical expenses for the year, and you are not able to, and Canada Revenue Agency reviews your tax return, for example, in the subsequent year, and they ask for receipt, and you are not able to provide them, they will be reassessing your tax return, and whatever refund that you have gotten from claiming those medical expenses, then they will be recalculated, and the CRA will take back all the refunds that they have issued to you. All right. Or if in case of balance owing, then your balance owing will be more in case of if they have not allowed you to claim for such medical expenses because of not being able to provide receipts, right? Okay. Next one is your filing obligation. I'm not sure if you have filed yours, but I have filed my income tax already. So the due date is April 30th for personal or individual residents of Canada to file their income tax return. If you are running a business, this is quite different. You have until, I think, June 15 to file your tax return. But in general, you are required to file taxes on or before April 30th. Especially if you owe something from the government as a result of your tax return calculation, you owe something from some amount from the government, you need to file and pay those amount due on or before April 30. Otherwise, you will be fined, or there will be penalties or interest charges that will be collected from you because of late filing and or incorrect filing, for example, right? And again, like I said, it is very important to keep receipts or accurate records and receipts, and keeping them organized on a yearly basis, because I think they have, you know, they want us to keep all those receipts for 7 years, and they can go back to us in any year before that. So we should be able to provide evidences of anything that we have claimed in terms of receipts. Right. Next one. So what are the examples of government benefits that are available to residents? Again, yeah, we have your Canada Child Benefit, Good and Services Tax Credit, and Canada Carbon Rebate. Canada Carbon, not all provinces are this benefit is available. There are only, I think on top of my mind, Alberta, Ontario, and I think Manitoba is having this Canada Carbon Rebate. But yes, like I said before, these are non-taxable, so we are receiving this benefit from the government without being taxed, and you receive them either by check or directly to your account if you are set up for direct deposits into CRA on a quarterly basis, I think. Yeah. So how to apply for benefits such as the CCB and GST credit? You can use your CRA My Account portal. So if you have not registered for My Account, you can get into the CRA's website and see how to register for My Account. This is very helpful because you're able to see your balances in CRA, and then the history of the income tax file that you have filed with them. Also, you can see there the slips that you have, your T4s, your investment slips, T5s and T3s, and yeah, you can. There's a lot of benefits if you are registered with CRA. And you can apply for such benefits by completing and mailing the appropriate forms to the CRA office. Taxation of investments and assets. Like I said, investment income is also taxable. Like for example, interest from the accounts that we have in our banks, dividends that you earn from your investments in stocks and mutual funds or whatever. When you sell those stocks and asset holdings, they are also taxable as capital gains. So capital gains is 50% of capital gains is taxable. Other reporting requirements for foreign assets and income. So if anyone is holding foreign assets 100,000 and above in the foreign country, right? We are required to file a form called P1135 to CRA. And it doesn't mean that this is taxable, 100,000 is taxable. No, they just want us to file and let them know that we have this type of assets in a foreign country. The only time that they will be taxable if when we sell those assets. But filing them is just for the CRA to know. Income from foreign sources, like I said earlier, if you have a rental property in other countries, if you have investments in foreign countries, they are taxable. Okay, there are some tax efficient investment strategies for everyone. Like for example, your tax-free savings accounts. So the government is giving us some limits in order for us to deposit into a registered product like such as TFSA. We call it TFSA, tax-free savings account. So anything that we earn from those deposits is tax-free, right? Another one is registered retirement savings plan. Like I said earlier, this one, any contribution we made into this plan is can be deducted from our total net income. So this will reduce our tax liability. A new one that was introduced this year, oh sorry, in 2023 is the first home buyer savings account. So similar to the concept of the RRSP, they can also be deducted from our total income in order to reduce our tax liability. But of course, there are some requirements that we need to meet before we are able to contribute into the first time homebuyer savings account. The investments in RRSP are they will become taxable only when we withdraw them, because the purpose of the RRSP contribution is for us to utilize them or have them as a source of income when we retire. So they are not taxable, and sorry, they are only taxable when we withdraw them, and then they will be taxable using the rate of income, the income bracket that we have for now. Like for example, if we are working right now and you have a 50 or 100,000 income, if you withdraw from the RRSP, whatever is your tax bracket, it will be used for such withdrawal. So it's not advisable to withdraw your contribution from your RSP as of this when you are still earning a lot, right? So because the purpose of this is for your retirement, so that your tax bracket is lower at the time. All right. So taxation of employment income. So again, wages and salaries, bonus and tips. I have mentioned this already. Payroll deductions, you will see when you have unemployment, there will be some deductions for CPP and EI, your pension contribution. And then, like I said before, there will be allowable expenses when you have self-employment, vehicle expenses, home office, and so on and so forth. And yeah, these are the sources where you can find some information about your taxes. The CRA website, there will be tax clinic, free tax workshop, or immigrant services. When you go to some immigrant offices, they will be offering some information sessions like this. And then, of course, you seek your professional tax advice and assistance from CPAs, tax consultants, and tax preparers if you need more information on tax matters. Yeah, with that, I think I am ready to answer some questions if you have.
Thank you so much. Can we, by show of electronic hand, give a round of applause to Mr. Roberto for a job well done. Thank you so much for sharing your knowledge and expertise with us. We really appreciate that. Yes, this is time for us to go through a couple of questions and answers that you might have. I think you can raise up your electronic hand. I could see one from Brother Tunde, Sister Shade, and I. Okay, we have a couple of hands raised already. So I'll start with Tunde, please. Unmute yourself and ask your question. Oh, is Tunde raising hand for a question? Or okay, I can't see the hand again. Okay, I have Sister Shade, please. Go ahead and ask your question. Unmute, please.
No, I'm okay. I
Ah,
think it was a mistake. Yeah.
okay, okay. Thank you. Brother Ayotunde, do you have a question? Okay,
Yes.
please go ahead.
Thank you very much. Thank you so much for the presentation. I think I can speak for everyone when I say that we are quite grateful for you taking the time. So just have three questions here. I really don't know much about taxes, to be honest. So in case my question sounds a bit um basic, please pardon me. So you mentioned something about having a home employment. So I just wanted to know, how does having a home business really help with taxes? And what tax deductions and credits are possible if you have a home employment, maybe with your uh regular employment, you have a home business. How does that help with taxes? Should
Okay.
I list all the questions or just
No,
one
no,
by
no
one?
worries. I can answer that question. So you are employed and you have self-employment at the same time?
Yes, yes.
Okay, okay. So uh like I said, I mean they are like your employment income is taxable, and also your self-employment income is taxable. Now, how can what type of deductions you can claim? So if you are using your home office, your home as an office, or using your home to earn your business, right? You can deduct all the expenses or certain expenses in your home. Like for example, if you are paying your rent or you are paying your interest in the mortgage, you can deduct part of it. It depends on um, the portion of your house that is being used in the business, right? Like for example, if you have a 4-bedroom house and you are using one bedroom, then the calculation will be 25% of your home is being used for earning an income, that business income. So you will be able to deduct that from your income. Like everything that, like for example, your utilities, like I said, interest on the mortgage, or if you're paying rent. Yeah, those are the basic expenses that you can claim.
Thank you very much. For the second question, let's say I donate to a charitable organization. Let's say of my yearly income, I donate 10% to a charitable organization.
Yeah.
What's the best way I can use that when they give me the receipt at the end of the year, when they give me the eligible amount of gifts, what's the best way I can use it to lower my taxes, the taxes I
Yeah,
have to?
that's a great question. Okay, so there is a calculation for donation for you to be able to claim a non-refundable tax credit. I have mentioned that in my presentation earlier. So donation falls under a non-refundable tax credit. So there is a calculation that the CRA is using in order to calculate for the tax credit. So not all the donation you made are can be used as a non-refundable tax credit. There is a calculation in there. How to best use of that? I think you need to take a look at your bottom line when you file a tax return, when you have calculated your tax return. Like for example, if in 2020 you have made donation of say 1,000 for 2023, and you see that you have already paid more taxes to the government in 2023. You are getting back some money already, even without the donation. So what you can do is you can reserve your donation for 5 years, and you can use it when you need it. Like for example, when the time comes that you owe more taxes from the government, right? So as a result of calculating your taxes. So you can use it this year at the time that you have made the donation, or you can use it for the next 5 years. Yeah, for other taxes so again, you have to take a look at your calculated tax return and see if you need to use it now or you can delay it. You can postpone it until 5 years.
All right, thank you so much. Just to follow up on that, would it matter if I report the donation now, but I don't need it now? Will the CRA keep it for me till I need it?
The CRA can, like, because the non-refundable tax credit is being calculated, like when you use some software or something like that you can see internet, for example, you use a TurboTax, the TurboTax will automatically calculate it for you, and if it is not needed, then it will be automatically carried forward, right? If your non-refundable tax credit have already reduced your tax liability to zero, then that's the time that they are carrying it forward. But if your tax liability is not zero because of your non-refundable tax credit, then you can still apply the donation and it will not be carried forward. So what will happen is your refund will be bigger, like in the case of if you have a refund for the year already, right? So it will be bigger if you claim for donation, right? If your non-refundable tax credit is not yet has not reduced your tax liability to zero, it will only the system will only carry it forward when your tax liability is zero because of your non-refundable tax credit. I hope you understand some technicalities on this, but yeah, that's how it works.
All right, thank you very much. My last question. I recently came across this T1213 form. So I was wondering, I don't know how to use it. So I was wondering if it was worth it, what donations can be used. Should I be using past donations or donations I expect to give during the year? Is it worth using the T1213 for deducting from source?
Sorry, I'm not familiar with, like, what is the form again?
T1213. I heard that you could use it to for tax deductions at source, where the amount of tax your employer removes, something like that. It will reduce the amount of taxes your employer removes from your paycheck because of a donation.
So you're saying it's a donation? I'm not familiar with T1213. But is it something that you find in your T4?
No, it's a form that I thought I saw would help reduce the amount of taxes that are deducted by your employer from every paycheck, but I can't be sure. So
Wait a second. Let me see if I can find
Is it T1? What's the number again?
1213.
So it says a request to reduce tax deduction at source. Okay. So I think I know what you're saying here. Hello, are you still able to hear me?
Yes, sir. Yes, I'm here.
Okay. So there is an opportunity for you to request to reduce the tax deduction at source. You know, the tax deduction at source means your CPP and EI and the taxes that is being deducted from your payroll. So you can actually request your employer to reduce the amount of tax that is being deducted from your payroll every month or every bi-weekly, or you can request them to add more, right? In order for you to, because at the end of the year, in order for you not to be surprised by the tax owing, the large amount of tax owing. For example, you have you have increased your they have increased your income for the year, for example, and there is a tendency for you to pay more taxes at the end of the year. So what you can do is you can ask your employer to add more deductions in your payroll. And and to your question, in the same way, you can also request them to reduce the deduction that they are deducting from your tax return.
Yeah.
Thank you very much. Thank you very much. I
Yeah.
appreciate it.
Sabola.
Yeah, I'll say that that form would be beneficial to you if you have like 2, 3 jobs. If you are working 2, 3 jobs, all of them will submit to T4, and what they will be deducting will be actually based on how much you're earning from each. Meanwhile, if you're earning same income from one employer, the same income from 3 sources, if you are earning that same income from one employer, the tax deduction will be higher because you will be on a higher tax bracket.
Right.
But when you're earning small, small income from multiple sources, they will treat you as a small income earner. So they will just reduce the basic. At the end of the year, most likely you will be owing money to the CRA. So the best point, best time when you have like 3 jobs is actually good for you to use that form to tell the other 2 employers that they should increase your taxes, how much the deductions that they are taking. So at the end of the year, when you're filing your taxes, you will not have tax liability. Most likely you're going to get refund back. But if you are working one job, the tax deductions, the deductions for source will be based on your full income. So it might not be beneficial to you. That's just my contribution.
Yep.
Thank you very much.
Okay. Thank you. So I think I see Sister Shade, then Brother Shion.
Yeah, thank you so much. Yeah, my question is this. Still on the donation. The donation, does it the tax non-tax credit, does it apply to reassessment? So what I mean is this. Like I did my taxes, I filed my tax, then maybe towards the end of the tax year, they asked me they reassessed me and they asked me to pay back. So if I pay back now, so does the donation, does it apply to that payback assessment? I don't know whether you understand my question.
Yeah, I think I understand your question. Okay, but like if you are being reassessed by CR, there could be multiple reasons, right? The question is, did you already use your donation in the tax return that you are saying you have been reassessed?
No, I did not use it. I still have my donation intact.
All
And
right.
now they reassessed me and they asked me to pay back. How do I use that donation to lower that reassessment?
Oh, you can actually do an adjustment on your T1, like in when you are being reassessed in technically they are adjusting your tax return already. But if you want to use your donation, the donation that you are keeping till now, you have not used them, of course, there's an opportunity for you to use them so that that you can reduce the amount of liability from the CRA in that case. If you're
So what if you did not use it and you have already paid the reassessment fee? So what are you going to do for the next tax season?
So you can use it, as like I said, you can use it for the next 5 years if you have not used it this
But
time.
it will not affect that reassessment that I've already paid.
No, it is not. No, it will not. It will not.
Okay. Okay, thank you.
Thank you. Brother Shion.
Okay, thank you so much for this financial education. I just want to find out. Thankfully, you mentioned that there are instances that after tax filing, that one may have to it may be discovered that one is actually owing,
Yeah.
and most times the employee doesn't really know much about how much ought to be deducted, and For instance, when I was actually working last year and I saw those deductions, I was like, wow, these deductions are actually quite
Crazy.
huge. And I and I think what Mr. Abiola addressed now actually was responsible for that anyway. However, please, how can we put this in under check? Because most times it brings surprises when you file your tax and they say you are owing this particular amount of money. What can we do to control to prevent this early enough as at the time that those deductions are being made at the employment level? Is there a control? Is there anything we can do as employee to address this, to avoid owing the government?
Yeah, like I said earlier also, there is if you are anticipating that you will owe money from the government, just like what Bola said, if you have multiple employments, you can always ask them to request them to have additional deduction from you from your payroll, right? Like say, for example, on a bi-weekly basis, you can add additional $50 for the income tax deducted. Then that will, I believe that will help, like at the end, towards the end of the year, when you have to file your tax and you are anticipating that you will owe money from the government. And
Okay.
another thing is, if you have an opportunity to buy RSPs, those registered products that I have mentioned, that will also help, because that will also reduce your income, right? The taxable income. So they are direct deduction. Let's say, for example, you have a 50,000 income for the year and you have made contribution to your RSP, say 5,000 for the whole year. So the taxable income will be reduced to 45,000, right? So that will also have some difference in the calculation of your refund or balance owing at the end of the year.
Thank you so much.
Yeah.
I think we have a couple of questions in the chat. Is it possible to be tax owing if the only income you have is a T4 from a single employer?
It is possible if the employer is not doing a good job in doing their T4, right? So they may not be calculating the amount of tax, but mostly you will not, mostly. But just in case there are some employer that are not doing a great job in making the deduction, so you may end up owing at the end of the year.
And I think the second question is, to be clear, we are able to apply the donations receipts at the point of the assessment is made. I
I
think
think I have answered that question already.
yes, you have already. Yes. Yeah. Um, I have a small question there, because I know we have a whole lot of families that are also filing maybe for the first time. So is it possible to file jointly as a family your taxes?
That's what we are asking the people to do, is to file. If you are a couple, it is recommended to file jointly, because you can maximize because there are income or expenses that you can transfer between your spouse, right? So there are those things that you can transfer between you. So, like for example, childcare expenses, you can transfer, and or medical expenses. It's either one of the spouses can claim for all of them or part of them. So it will be beneficial for you to file together with your and along with your dependents. Yeah.
Yeah, thank you. And just a follow up to that. So in the case that we have the spouses having two different income levels, in case maybe one is earning more than the other, so which of the two should file to claim those deductions?
It depends on the type of expense. There are rules, like CRA has rules for each and every expenses that we can claim. For example, childcare. So childcare is given to the lower income, right? So, and in some instances, it will be up to us to determine what is beneficial. For example, donation, like who, which of the spouse should claim for it so that it will be beneficial for both of them, right? Yeah. So it really depends. So your tax expert can always help you on that. Some of the software that is around there is suggesting and automatically putting it, transferring it to the proper spouse file, so that the maximum benefit is obtained, from filing together. Yeah.
Okay, thank you so much. I don't see any hand for any other question. If not, okay, there's one more. Sister Buki.
So I just want to ask, someone asked in the group one time what they should do about the T21. Is it 221 now? That's the sorry, the T4A right now. So they were talking about the T4A. The person is a student and they got T4A from their school. So
Yeah.
they were wondering what they should do with that T4A. Could you speak to that? And then this also the tax receipt that they give in the school when you pay the school fees too. If we can just give a brief information on that so that the students too can know how to file their taxes.
Yep. Okay. So the T4A, I'm assuming they have gotten some grant, right, from the government. So that is actually, it's reportable, but they are not being taxed. So you need to report the T4A. You put it in your tax return, but you put it in the proper place so that it is not taxed because it's tax exempt if the student is a full-time student. And along with the T4A, I suppose that there will be a T2200 as well, T2202, which is the tuition receipt from the school, right? That can also be claimed as or education as a non-refundable credit under education and tuition credit. So whatever is the amount of the tuition or tuition fees that have been paid, 15% of that can be used as a non-refundable tax credit.
Thank you.
Yeah.
Thank you. I think we'll be taking the last question from Brother Kingsley, because as we are come to the top of the hour, time is running out. So, Brother Kingsley, please make your question known.
Okay, thank you. I would like to know, when you're paid the bonus at your workplace, are you taxed at a higher percentage rate? Because oftentimes I've discovered that the bonus you get at the end of the day is nothing compared to what you were advised earlier on. And then apart from on an individual basis, apart from the RRSP and FHSA, is there any other way by which an individual can manage his tax liability? Thank you.
Okay, to answer the first question, whether the bonus is getting into the highest tax marginal tax rate, the answer is no, it's not. It's increasing your income, right? So whatever is the tax rate that is applicable to your total income, including the bonus, that will be the tax rate that will be used. It will only be increased when you are in the bracket. For example, you are I will just mention a hypothetical number here. For example, the tax bracket for 50,000 income right now is 15% in federal tax, right? If the next level is 55,000 and your bonus is 5,000, right? So that will make your income, total income is 55,000. Then you will be taxed at the higher bracket for the bonus, the 5,000 for the next one, right? but it doesn't go to the highest one, which is I think 33%. No, it doesn't work that way. It will always depend on your income, and it will be the total income. And like I said in that example, it can go to the next bracket if if your income is more than the base amount already. To your other question, RRSP and FHSA right now is I think the only two products that I know that can reduce your income. But there are, in terms of strategies, you need to know you need to have some knowledge about what expenses, like for example, if you are having a business or something like that, or you're in self-employment, you need to know what are the expenses that can be claimed in your tax return. So I advise that you ask that question and using Google, or for example, so that you would have some information about that. But as far as I know, there are the two registered products that I know that can help reduce your income as of today.
Thank you so much. Oh, I think we have one more. The Grace, Sister Susan, let's have it.
Okay, no problem. Yeah.
Sorry, I dropped a question in the chat and then I raised my hand just for a follow-up on Bracking's question. So on the bonus issue, if
Yeah.
it raises your marginal tax rate, is
Yeah.
that rate applicable only at the point of paying the bonus?
Yeah,
Or
it's
does it
only
affect the other parts of the year, the other pay stubs?
no, it's only affects your, if you take a look at your T1, like if you have already filed and you have your full T1, there is a portion there for the calculation of your tax return. Like in my example, the 50,000 income will still be subject to the 50,000 rate, and also only the 5,000 is subject to the next marginal rate.
Okay, gotcha. Thanks. Then the question I put in the chat, let me just say it. So the amount that shows on the line 1,500 after you file your tax, is that amount after the deduction of the basic personal income or before?
Wait a second. Let me search for the line 1,500. 15,000 on your tax return where you report your total income before deduction. It is before deduction. The 15.
Before deduction.
Yeah.
Okay. Thank you.
Thank you so much. I think this has been a very engaging session, and we really want to, with our virtual hands, to say big thank you to our speaker for helping us to clarify this. Thank you so much, Sir Roberto, for your time. We really appreciate spending this evening with us, and we thank you for sharing your wealth of knowledge as well. We really appreciate the answers provided. So I think the next stage is for us to keep on learning as much as we could. And if you need the services of the experts to help you figure it out, I think it's better to get those information right, because setting things in order, especially as start your life here in Canada, paying taxes is a very big component of that. And
Right.
so I will encourage you to, take advantage of the information that is right there. And I think the CRA do a very good job also providing information, but definitely as a newbie, you may need the expertise of others that are seasoned in that space to walk you through. So thank you so much, Sir Roberto, and thank you everyone for your time today. We look forward to the next series. We'll be bringing it to you from the Treasury team of NACA. So thank you, and wish you a wonderful evening, everyone. Thank you.
Thanks for having
Thank you
me.
so much. Thank you.
Thank you so much. Thank you.
Thank you.
You know where to find me if you have more questions. Okay.
Oh, sure.
Yeah.
Sure,
Sure,
absolutely.
sure. Thank you.
You can reach out to me. I will be able to provide context and share the details with you.
All right. Thank you so
Okay.
much.
Okay, bye.
Have a wonderful day. Bye.
Thank you.
Bye.
Thank you,
Thank you,
Mr.
Roberto.
Roberto.
Thank you.
Appreciate it. Bye.